Let's talk to Wilson Leung. He is the Chief Market Strategist at Trendsetter FX. Very good morning to you, young Wilson.
Good morning, young Nick.
Right, without further ado, 2 slides to go through. Let's kick off with the first one, the US dollar against the Japanese yen, the daily candlestick chart. What are your observations?
Well, I think that the dollar yen is the most interesting currency pair versus the dollar among the G7 currencies. And I'll give you 2 main reasons why I think selling the dollar yen would be profitable in the coming 5 to 6 days. Firstly, the US dollar index hit a 1-year high last Thursday. Until that Trump made some US dollar negative comments.
Yeah.
So dollar has been sliding across the board. And yesterday, we saw the yen rising across the board in reaction to the weekend's media report that the BOJ will make minor adjustment to its monetary policy, or whatever that means, but it's been interpreted as being hawkish. So that made the Japanese bond yields jumping to a 6-month high. So in that respect, I think that we are going to see more yen strength until the BOJ meeting next Tuesday. That's why I would recommend people selling the dollar yen in anticipation of further decline. And if you look at daily chart, Nick, you can see that the yen has been ratcheting higher from this year's low at 104.57 in March, all the way to 113.17 last Thursday. That was a 6-month high. And then since then, it has come off due to the media report. So I reckon that we are going to retest this month's low at 110.28 as the first target. And if we break below that, we're going to go lower to June's bottom at 109.20. So my recommendation is sell the dollar yen at the rate you're comfortable with, i.e. market. And the downside target would be 110.30 and 109.30.40.
Understood. Okay, let's move on to the weekly charts. How does the weekly look compared to the daily chart?
Well, basically that you can see that the dollar yen has been moving broadly sideways for 1.5 years after having risen from multi-year low at 99 even to 118.66. So I'll skip the sideways trading movement in the last 18 months. So you can see that if my observation is correct, that the rise from this year's low at 104.57 has made a temporary high last week at 103.17 is correct, then we will see a minimum retracement to the 38.2 Fibonacci target at 109.88. But then I think that normally we will see a 50% correction to 108.90. So my recommendation is to sell the dollar yen at any rate you're comfortable with, target at 108.90. But I think that 108.12 will hold unless we see a major shift in the BOJ's monetary policy. So that's my take on the dollar yen in the coming weeks, Nick.
Wilson, excellent stuff. Thought-provoking as always. That's Wilson Leung from Trendsetter FX. Thank you.
You're welcome.